Hey, good afternoon, folks. It's Jeff coming to you from Florida. This is not a video on a stock recommendation. It's more about how to read charts. And I'm going to talk about the concept called an overhead supply and why it's important. Uh, I'll be switching to a different video in a second. Uh, since this is full screen, if you're going to view this on your cell phone, just click the full screen button and turn your phone sideways, and you'll be able to see the chart properly. I hope this helps you because it has helped me tremendously understanding what overhead supply is and why it's so important. Hey, good afternoon, folks. This is Jeff coming to you from Florida. It is Sunday afternoon, uh, May the 31st. It's about 3 o'clock in the afternoon. Uh, this particular video is not a stock recommendation. It's more about how to understand charts and why stocks move in certain ways. Now, this is not a guarantee, but what I'm going to talk about is something called overhead supply. You know, I get these comments all the time is that, stocks never go up as fast as they go down. And that's true. All right. So here's NXT Power, which is recently broken out. And we're going back a couple of weeks here. You can see it had a big down day here where it dropped from 147 down to like 135, and then it dropped down even further, and then it dropped down the next day, it dropped down the next. So literally in a couple of days, it moved down from $147 a share literally all the way down to like 117 at one point, and then it started to move back up. And people say, well, why didn't it move up as fast as it moved down? Um, this is not a 100% guaranteed answer, but I'm pretty much I'm about 80% confident I'm correct here. So let's say you bought these shares at 147, and then the same afternoon you're looking at like 135. Now a lot of people don't have stop losses. They buy these shares and they may check on them a couple days later, and all of a sudden their shares that they bought at 147 are now down to like 131. They're saying, "Crap! I'm just going to hold on to it." And I will sell it once it starts to move back up because it's a strong stock. It has a great trend going. This is just a temporary dip. So once a stock gets to here, you can look at these shares that were bought up to here as something we call overhead supply. It's called an overhead supply. So as the price goes lower and lower, the people that didn't sell, that those number of shares, that overhead supply keeps increasing. So there's some people that bought in here, there's some people that bought in here, there's some people that bought in here, and they're all looking at losses when they get down to here. So as the stock starts to move back up, they just want to get out. They sell, they say, I just want to break even, get out of this, move to another stock because there's plenty of stocks out there. There's 10,000 stocks out there. So that's called overhead supply. So as the stock moves back up in price, it's eating away at this overhead supply that started up here. And you can see once we get back to consuming that overhead supply, what happens to the price of the stock? It zooms up from 147 to 156, just like that, once you have eaten away at that overhead supply. So keep that in mind all the time. When you're buying or selling stocks, you know, unless you have a stop loss, you're going to get stuck with these shares and you're going to be part of this overhead supply. And once that oversupply is eaten up, then the stock can take off in price. And you'll hear me say many times on my live sessions when we're looking at stocks, I said, well, let me go back to the previous high. And I will tell people, I'm going to wait until it breaks this previous high before I'm interested in getting in, or once it gets close to the previous high, assuming there is a nice uptrend in place. So keep that in mind. This is a perfect example of exhausting an overhead supply, and you can see what happens to the price once that overhead supply has been consumed. Boom, it shoots right back up. Okay, so that's a good lesson for today. It's called overhead supply. Keep it in mind when you're looking at charts because it will pay off in spades for you. All right. Thanks.